As the summer's rolled on, the markets have begun to heat up. Here to look at REIT performance in July is NAREIT Vice President of Research and Industry Information, Brad Case. So Brad, can you talk a little bit about what you saw in July?
July was another strong month for REIT investors. It was yet another month in which REIT investors did better than investors in the broad stock market. In fact, that's really been true for a very long period of time now. In fact, over the last 10 years, REIT investors have received total returns averaging 9.4% per year, whereas investors in the S&P 500 have actually lost money over the last 10 years. And even investors in smaller stocks and the darlings of the stock market, which have been value stocks over that past year, even they didn't keep up with REIT investors. So REIT outperformance of the stock market is an old story, but certainly one that continued during July.
Okay, so July was a good month for REITs. Does that reflect anything in terms of the overall strength of the commercial real estate market?
Oh, I would say not at all. In fact, July we continue to see a pattern in which there's a real disconnect between what is happening to REITs and what is happening in the broad real estate market itself. In fact, the real estate market continues to be very weak fundamentals. And REIT investors are certainly aware of that, but they're really looking forward to the fact that REITs are going to be able to buy good properties at very favorable prices over the next few years. And so I expect to continue to see that disconnect between the success that REIT investors are having, even while the broad commercial real estate market itself is currently very weak.
And yield has always been an important component of REIT investment for some investors. What's your outlook there in terms of the REIT yield?
Actually, I would say the current dividend yield is a perfect example of the disconnect between the overall real estate market and the current situation for REITs, because REIT dividend yields are at about 4.6%, which sounds good in general, but by normal historic REIT standards is still very, very low. REIT investors are essentially saying that the current dividend yield is based on current earnings, which in the very weak real estate environment right now is not surprising. REITs are looking forward to very strong earnings going forward, and so REIT investors are really valuing stock prices according to where they expect the yield to go over the next few years, rather than where the yield is computed on today's earnings only.
Great. Brad, thank you very much. For REIT.com, I'm Matt Bishar.